The following is an excerpt from an askSlim premium level video. Follow us on YouTube, give us a thumbs up if you like this video, and do subscribe to this channel on YouTube. Share it. There's tons that come out every single week. Follow us on Twitter at askSlim, and write to Matt at askSlim.com for trial memberships. We have trial memberships available for all of our levels, 1, 2, 3, and 4. And go to the askSlim.com website for details. Thank you, and enjoy the video. So now we're going to look at the stock market. We focus on the S&P 500 on the daily chart, which really is a pretty good representation of all of the indexes. We're going to do our analysis in here, and what we always do is we focus on support, resistance, momentum, and cyclical patterns, key levels. That's what we want to do. We really want to get a good handle on all of these aspects. We do some of the evidence analysis where we put together multiple time frames, and I think that's the only way you get a major good feel for the market. It is all about feel. It's about understanding what the energies are that push the market, and when there are times certain things could happen or should happen, we call that phasing. It's really windows of time that you create an expectation, and that's what we do when we do this type of analysis. So let's switch over from the bond market to the S&P 500. Here is your major 35% break. Cycles in here we're running about 20 days. That's this blue cycle right in here, the solid one. You can see 20 days over here, 20 days, 20 days. It then had a 16-day cycle because it was so oversold it couldn't wait to rebound in there. And then you get this dash cycle, which is really what formed. And you can see in here, it's really going back to that 19-20-day patterns in here. But now you see what happened. The momentum turned up, and then it turned down from exactly the top of that resistance. We originally talked about the highest probability would be that it would get up to about 27.30 area at some resistance right in over here. And then it did much better. So actually it was here, about 27.80. That was the 50% level right there. And then it got much different because the length of the cycle only left 2 days to correct. You could see that, and then started to move up again. So that's why we said what we said. We said we are very bearish long term. We see that the intermediate had improved, and we see the short term was in a very bullish pattern. And that's what gave us this perfect projection in here. Now you can see there's a little bit of an island right in here. That island is formed by the upside gap right here and the downside gap right over here. At this level right over here at about 27.40, 27.50, that is the perfect spot for it to stop. Now we still have upside momentum. The supports from the weekly are here, 27.75, down over here around 26.70-ish, something like that. That's what we really see. That's where the downward target is over these next 2 weeks. With that, we think we're going to continue this downward erosion that we're having. We have talked about a decline into May, and that's where it targets right now. The breakdown over here, 27.27 under this last low, that's a pretty key level. If you get under there fast, it's going to set up a potential free fall that's worse. If it gets there late in this pattern, then it's not as meaningful, and then you're likely to get some further rally in here. I said we're going to go to school on this rally in here, and we did, right? It told us where the resistance is, and now it's giving up all of this ground. S&P's down 88 points on the day as we talk about this, as the market is basically on its low. This ton of selling coming in, the NASDAQ finally giving some ground, but only giving up 250 points. Almost 300 points right now is about 3%. There's probably more risk than that in here, but finally the stocks, the handful of stocks that have led the market on the upside well, they are starting to give ground. And well, like I said, I think Amazon made a top. I think Apple's making a top in here also, and these other FANG stocks, I think that they're going to succumb to some more severe selling. So we'll see if we can hold on to the positive momentum. This was a key level to reverse. Here's your upward momentum. The slim ribbon gives you support right in over here. That is the bottom of it, comes in at around 27.90, we'll say. This is right over here around 27.70. So we're going to look for it to come down into this area, 27.90, 27.70. And we'll see if we can get another rally again. Basically, we think that the range that we're looking at in here, 29.50, 27.70, is pretty reasonable over this time period right in here, where if it doesn't break under this level right here, that's 27.27, then it's likely to come up and test these levels up again at 29.40. If it breaks here, it's a lot different pattern, and even testing it reduces the upside projection. So we're going to say the next few weeks really look like they're to the downside in here. The date of this low, or the low range, is 519 to 526. And that's when we think that this cycle, this declining cycle, will end. So that means if you get some up days in here, they're sells. And you're likely to have a high probability that it's going to be moving down again. Some of the evidence, intermediate patterns are stronger. We're looking for a wide chop into June. And all of that is an upward correction in what we think is a major bear market that peaked up at that price right over here that you can see, 33.93, and that break to 21.91 was simply the first wave of a long time of difficulties out there. The realities are coming into focus in here, that the market got way ahead of itself as far as this rebound. And you can see as we lose here 3%, 88 points, that's probably just the beginning of this moving back down in this upward corrective period and creating this range that we're expecting. I don't think we have a good market from here on. And I think that we have, well, it's not a good market, it's a bad market, or a worse market. This is a top that really looks to me like it's formed. Let's look for these numbers in here for this week. 27.90, 27.70, and potentially down over here, 26.70. That is a look at the stock market, the S&P 500, and just a ton of stuff that I had to show you today. I hope that you thought it was great information. Make sure you write it Matt at askSlim.com. He will send you all of these, the special for the workshop, the trial for level 2, and we have trials available for all of our levels that you're interested in. So you can write him and he will help you, give you a ton of information about what is in each of our membership levels, from investor type interest to trader type interest, really advanced skill type interest. There is something in there, I think, for everybody, and I share with you my 45 years as a trader and my fantastic team bringing you tons of stuff every single day.